Good morning, everyone. Welcome to Admiral Markets. Welcome to this live trading room here where we're going to take a look at the Forex market and at the charts and technical analysis to decipher what's going on with price and the currencies. First of all, though, before we actually start looking at the charts, this quick PowerPoint to give us an explanation of what we're looking at. And then, of course, we're going to head over to the calendar, and then we'll take a look at the charts. So with that said, first of all, the disclaimer explaining that this material has been developed for a global audience and is intended for a global audience. Please take into consideration that this info in this session may not be suitable for everyone. To get the corresponding information on charting conditions and other details, please take a look at admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity. Also, trading for exchange at global financial markets is considered high risk and may not be suitable for all investors. Please seek the advice of an independent financial advisor, and this webinar is for educational purposes only. So by continuing watching this webinar, you agree with the risk disclaimer and its content. So thank you for your attention on this. So today we're going to take a look at these 5 steps. As always, these are basically kind of like a checklist before anyone would enter the trade. It's always good to take a look. Of course, just because we've done this checklist doesn't mean we don't have any trade management to do after that. And also important is the trading psychology. Plan to trade is the trading plan. It's the trade management part. And trade the plan, of course, is the trading psychology part. Before we enter, though, this is basically a rough checklist of what you can look at to identify whether the market matches our strategy or the strategy matches our market or the market, right? So we're always looking for synergy between those two, because no matter what our strategy is, it has to be implemented at the correct market structure, the correct moment, right? Our strategy could be very valid several times in a week, but we don't want to trade it when it's not valid. So logically, we're looking for a sync between those two, and when that happens, then of course we have more and more the green light to trade. As we go along these steps, more green lights go on green, the closer we get to a trade. And that's the difference between a trade setup, obviously, and a trade. The first step is defining the trend. You can look for opportunities then, if you have a trend or not, depending on what you're looking for, or maybe you're looking for a range. This all depends. The configuration of all these steps, of course, is per your individual strategies, but these are the steps that are basically valid for everyone, okay? Now, personally, as you know, I'm always a more with the trend trader, so at point 1, I'll be looking for with the trend. So when I'm defining a trend, I'm looking for a trending mode. Now, we'll be using mostly moving averages and trend lines, but in this webinar, it will be specifically focused again on moving averages, just like last week. And the reason why I did this is just to kind of like focus a bit more on one topic in one sequence, in one like fluent pattern, instead of like all chopped around. I did it on purpose to get more fluency so that we focus on a topic a bit more than just one session. So I hope you enjoyed that. Last week we'll continue with the moving averages this week again, or at least today. I'm not sure what tomorrow's focus is. With that said, yesterday we had the Aussie cash rate announcement. It stayed the same, 2.5. We also had an RBA rate statement. This week we have, furthermore, we have today German and pound PMI, so those are big things, and the dollar PMI. In fact, that's already 7 hours from now. Tomorrow we have ADP. Thursday we have Euro interest rate. Friday we have NFP. So big things coming up. Could be slow and volatile week when the news announcements are released. So with that said, let's take a look at the euro dollar. This time around a bit different. Not only do I have moving averages on the chart, but actually also a Camarilla pivot point indicator. And I'm going to be looking at both here in combination with each other. So this is basically the 50-minute chart, and we'll be looking for space within the intraday time frames here, preferably with the trend. So if we look at the euro dollar here, we see that we're very close to the pivot, in fact, and we got a high and low indicated by the golden colors, the daily high and low right there. Yesterday, more of an upside day than a downside day, and bullish close compared to the open. We can take a look at that, like here. But we can also see two big wicks as well, right? So although the body is slightly bullish, it's pretty close to a doji in a certain sense. So we did have two bullish days in a row, but on both sides a lot of wicks. So there's a lot of tug of war. We know there's a big battle going on between bulls and bears apparently. So who's going to win is difficult to say. If we look at this daily chart though, the bigger trend is still up. Price is above the moving average, is still above this blue band. So we'll have to see exactly, but I'm tending to think that this is still a retracement from our upside. The question only is, how far can this retracement go? At the moment, if we put a fib on this entire upside here from bottom to top, price did stop at the 50 fib. So that could be a turning spot at the 50 fib. Obviously, there's no rule that says that price couldn't go to the 61.8 at 136.60. So that's a bit of the question here. Does the price still make one more retracement, one more dip down to the 61.8? Or is the 50 indeed the bouncing spot for this weekly uptrend continuation? That answer is really unknown. And I would say yesterday's low, if we break that low, there's a good chance that we'll make that fall to the 61.8. Other than that, if we break yesterday's high, of course, there could be some breakout maybe to the next daily fractal here at 138.70. I think that roughly speaking, that's probably what we're looking at on this daily chart. So basically, if I can put it lines here, something like alrighty. What I mean is this: here to the downside, that space, and here to the upside, some space as well. Within the yesterday's high and low, things seem to be a bit choppy, but let's take a look at the 50-minute world to see if there could be any trade within the parameters of yesterday's daily high and low. Other than that, waiting for a break of the daily high and low to go up to the next support or resistance, in fact. Down to the next support, of course, and up to the next resistance. So let's go back to the 50-minute world. Do we have anything that's interesting? Not at the moment, in my opinion. Price is above the blue band, but it's also squished below the purple band here, which is bearish, slightly bearishly pointed down. Seems to be squished in between them, actually, as you can see. So at the moment, really no guidance here. From my point of view, really no edge either way, and we'll have to see how price develops throughout the day. If we maybe get a I don't know, it's difficult to say what will happen exactly today, but if price, for instance, breaks below this blue band, then hooks back to the blue band, and then stays to break down to the downside, we can see that there's plenty of space to the daily low here. For instance, that would be one scenario. If the opposite were to happen, if we break up and start to make a bear flag down to support and then bounce up again, that could be interesting too, but we have to make sure that there's some space at least to the daily high, which could be a resistance. Okay, so I'll draw those lines one more time just in case you're multitasking. I'm talking about this or this. And whenever it breaks where the blue line is, there better be enough space to the golden lines of the daily high and low there. Okay, so take a look if you want. At the moment, price is going sideways, so not interesting at the moment. Also, the moving averages are not lined up. If they were lined up and price were going sideways, it could still be maybe a breakout trade possible. But whenever price breaks above this consolidation or this consolidation, we have the blue lines now. If it breaks above or below it, price is bumping into basically moving averages. Moving averages are flat, so what happens is that when moving averages are flat, they're going to be actually a gravity. So as soon as price will break above, there's a good chance it's going to go and give a hook back. And that's why, in my opinion, the initial breakout of this consolidation indicated by the blue lines that you see on the chart right now, that breakout is not so interesting. Of course, we can put blue lines on top and bottom and make it a consolidation, but it's not so interesting to me. So pound dollar. Pound dollar, a bit different. We have bullishly aligned moving averages. We can see the difference with the euro dollar, obviously. Yesterday was a bullish candle. And we had, let's see, we're actually having, right now, let me take a look, price is trying to break above it. Above this moving average, above this moving average and above the fractal. Now the pound dollar has a PMI, so I wouldn't be so happy to trade it right here, right now, personally. How much, for the fun of it, let's take a look how much space there is to the daily high. It's about 13 pips only, which doesn't seem too much. And it is not that much compared to the risk. If we put it below the fractal, it's roughly 13 as well. It's a 1-to-1. It's okay. It's not that great. Obviously, the high can break. But more importantly, we have the PMI, so I wouldn't be interested in the pound dollar as yet. However, if we break yesterday's high, obviously a break above yesterday's high, a hook back, and the next push up to the H4 and maybe H5 would be interesting. Okay, so that's something we can look for. I would say the bullishness looking a bit more interesting on the pound dollar than the downside. Why is the downside? Well, not to say that the downside couldn't happen. There could be a trade here below L3 down to the daily low. It is a potential space between these moving averages as well, as we can see, but it's a counter trend trade. So it's more difficult, it's more risky. With the trend, obviously, is to the upside because we can see prices above the blue and the green band at the moment. So a break of yesterday's high, a hook back, and a bounce, that's something that is the most interesting after the CPI has passed away. That, I think, will be the most interesting combination here on the pound dollar 50-minute chart. Take a quick look at the daily. The daily chart is showing, watch out for daily fractal, by the way, at 167.18. Okay, so when we break the top, there is maybe some minor space here, not that much, 34 pips before we break it or bump into a new daily fractal. So that's something to be aware of. But we can see a lot of bullish days already, actually 3, 4, 5, 6 in a row. Wow. So we'll have to see how much this can carry on. It's already quite a lot, in fact. Certainly price is above the blue band, so definitely an uptrend. Let's see. What you see on this chart are basically the pivot point indicator on the 15 Camarilla. You will see all daily fractals with highs indicated by horizontal lines, and you will see 8 moving averages, of which 2 sets of 3, 2 bands of 3, indeed, with high, low, and close. And 2 extra closes. I'll write that down for you. Okay. Apologies if anyone is new in here that doesn't know what we're looking at. But most of the people are more regular, so sometimes I forget to mention that you can always ask questions, and if you have any questions about the tools we use or the concepts, by all means let me know, and I'll gladly answer any questions. Basically, the idea here is to gauge what the trend is by looking at 2 sets of moving averages. This is more or less, if we look at let's go back to the 50-minute world to make it a bit more concrete. This is basically the 1-hour trend, and this is basically the 4-hour trend. And then the 34 and the 21 are to gauge basically momentum. Momentum is increasing here, momentum is dying down, right? So that's just to give you an idea. Daily highs and lows, of course, are just important levels for intraday trading, obviously, and daily fractals are just very big resistance, support and resistance levels. So that's the explanation of, and Camarilla is there just, of course, for intraday levels. So that would be the explanation of what you see in front of you. And the AO is there to warn us for divergence and swing highs, swing lows, and basically we can read also the added wave if we wanted to with it, and we have an idea what the minimum retracement should be using the AO. So that's the reason for that. Looks like the pound is pushing, but we got that news event soon. Euro pound is in a classical example of a trend where we have 4-hour down, hourly down, and the 15-minute world is trying to break after this kind of like bear flag pattern, chart pattern right here. Not a big fan of the euro pound and wouldn't be trading it though personally. There's not too much space between the current price and the low as well, but okay. Not a big fan of that anyhow. AUD USD had a very interesting movement. We had a big spike up, then this big move down, in fact. Of course, this is related to the Aussie interest rate and the statement that was made during and after that. For the moment, yesterday's high was broken, but it did go with a lot of choppiness. And just because of the interest rate, I would be careful of this one. I wouldn't want to trade it myself. I have a long-term vision on it, but because of the interest rate at the moment, it could be a lot of intraday volatility and movements that are something that I will let go and not be really too interested in catching. So not too interested in that. Obviously, if price maybe breaks above this top, then we can see everything is aligned to the upside. So there could be a breakout trade to that upside. But not a big fan. If you look at the 4-hour chart though, then things are definitely bullish aligned, because if you look at the most recent price action, we can see a breakout potential of price right here. Price was fighting against the long-term 4-hour, or this is actually weekly trend line, because every time we zoom out one time frame, we actually change, of course, the moving averages. On a 50-minute chart, there are 1 hour and 4 hour. Obviously, on a 4-hour chart, we're talking about a daily and a weekly trend here, right? So the weekly trend was still down according to the moving averages, and now price broke above it and has been above the daily already for quite a while. And you can see price is now going swiftly above our momentum moving averages as well. So in that regard, it looks very bullish, in fact, in the long run. However, due to this interest rate, you could definitely see some correction. I mean, this looks maybe like a small double top, so maybe in that regard we can see a correction of this upside and price go to the 38.2 fib. We stopped at the 23.6 and then bounce off that fib. So that's something that could happen. I'm bullish in the long run. The question is, will it happen right here, right now, or will it get some correction? Because of the interest rate, I will wait for price action to give me a bit more clues on that question. But if the interest rate, let me say it this way, if the interest rate announcement would not be here today, then this particular fractal, which is already above yesterday's high, and everything is still bullishly aligned, would be a reason to think, okay, this is actually a bullish breakout. Kiwi. Now, I know there are a lot of lines here, so bear with me, but Kiwi did break yesterday's high. After a lot of consolidation, bouncing off the pivot and the resistance. So this is looking interesting. If we get, I would say I'm going to look back at this currency pair in 9:30 my time, 8:30 a.m. UK time. If there's a fractal here, there could be an interesting situation where we make a retrace along somewhere in here at support or upon the break. Could be interesting. Let's see, yesterday we bounced off a 50 fib here, so there's definitely potential for a continuation of that breakout. Price is above the moving averages, and we are in a bullish uptrend as we speak. Everything is aligned. So this could be interesting. I like the Kiwi. I don't think there's any news event on the Kiwi. Obviously, if there could be some influence throughout the day by other news events. The dollar has one, but that's 7 hours from now, so that's a bit too far. So yes, this is something that I would like to keep an eye on throughout this webinar. I think that could be interesting potential. Let me check everything. We have the daily top being broken. We got some good space up to H4 after the dip. Yesterday was a bullish candle. So that is actually something interesting. Let's take a look at the euro. Euro is getting a momentum to the upside. Thanks Davor. So it seems like we're continuing with this bullishness of the last 2 days, although it has its wackiness and spikiness, as we can see. So let's keep an eye on this. Remember, our job is to react to price and market movements, not to predict. So it's better to let price confirm and wait for more confirmation and be patient. There's a lot of time still throughout the day to wait for a setup that matches like a trending mode on intraday time frames with a trend. And because the market is still early, let's face it, when the daily candle closes, there's a fresh new level, the fresh highs and lows of the day before, and then we have Asian session, and we have initial high and low, and we have small market movements. These are all probing, these are all tests, these are small movements, and in many cases, the initial moves of the first European Open, London Open are just something to be still cautious of, and 1 or 2 hours after that, you get a bit more sustainable trending modes. So this is the phase where you want to nicely prepare and be patient and kind of like be as a sniper waiting for the right trade to develop. But it's still a good time to prepare oneself and already be aware of the best trades that could be coming up. Wei is asking, how do you avoid end of quarter and end of month flows? Well, I guess if I avoid them, then I guess I would be not trading or reducing risk. But besides those two things, I don't have anything that pops on my mind besides that. Do you have anything that you think of? Maybe I can't think of anything at the moment, though. But oh, how does it mess up your strategy? I never really did any full like intensive research on that particular aspect. Would be interesting, in fact. But a rule of thumb that is commonly used is that it's more dangerous for the strategies because indeed because of the fact that the flows are going in and out. For instance, hedge funds are closing profits, reopening their trades maybe today, but they're closing it on the 31st of March because they want to show quarterly profit to their investors, for instance. So that would be the effect indeed. A bit more wacky effect it could have. Apparently, that's the rule of thumb. Let's see, Wei says that his solution is to trade long-term with 400 pip stops on daily closes. Yeah, you could definitely approach the stop loss differently. I didn't think about that, but it's a good point. You can use a bit bigger levels maybe than you usually would do. Maybe zoom out one time frame and use a daily high or low, or even a daily fractal instead of a 1 hour fractal. Indeed, just to give you a bit more leeway. Makes sense. Yes. Wei also says position size is important indeed. Agree. Remember, absolutely, totally agree. Position sizing. I mean, it's our accounts, our trading capital is something we must protect. So absolutely, it's our number one or only inventory, in fact, in a way. So yeah, definitely, we need to protect that at all costs. Absolutely. Dollar CAD right in front of us here. Is that a double bottom maybe? Could be. We have two daily lows at that golden bottom right there at 110. So could be double bottom. However, moving averages are flat when we look at momentum and the blue band here at the hourly. So yes, there is a potential breakout here above this consolidation, but what do we bump into? Right away we bump into daily high. So I wouldn't be interested in that particular break of this consolidation on the dollar CAD. Sorry about that. So a bit cautious at the moment. I will have to see how price responds. I mean, if it does break to the lows below and then maybe finds one more rejection down, it could be triple bottom, who knows? Or if we do break yesterday's high, make a hook back, it could be more upside. That is still a counter trend trade because we can see the 4 hour is still down. So I'm cautious on this dollar CAD. I'm not that interested at the moment. We'll have to see, but doesn't look too nicely set up at the moment. The structure is not that interesting. Let's see. Wei is asking about a triangle to the downside. Let's take a look. Well, it certainly broke below this support line and this resistance line, which definitely surprised me. It actually broke below this triangle already, which was already a big surprise to me. And the bears have kept control ever since, indeed. There could be some, maybe indeed, like this potential. Maybe a descending wedge, but it definitely would have to move down like this, and probably something like that could happen. It's still far to tell from here whether how much potential that has exactly. It is possible, though. Not saying that it's impossible. It's just that we have to see. A break below, in a way, below these bottoms could indicate a move back to that bottom, indeed. And if we do make one more move to the bottom, this could be indeed a descending wedge. It's possible. Yeah. Let's see. Time will tell if we push through this orange line or if we bounce off it to the downside. Yep, good one. Good chart padding recognition there from Wei. Very important for others that maybe don't see it to practice this on your chart in the past. Literally go to, I don't know, whatever you want back in the past on a particular time frame and draw the patterns that you see, because the more you draw them, the more you practice them, the better you'll become in seeing patterns and recognizing them quickly. So that's one way of practicing our pattern recognition skills. And it's a very useful, very important part indeed of mastering, learning Forex and understanding market structure and price movement, definitely. Dollar Swissy. Daily high and low here, pretty close by. Daily low, excuse me. also breaking to the downside, just like the euro dollar. So here probably not so much different than the euro dollar. I might as well keep an eye on the euro dollar because it's roughly the same, I would say, going on here on the dollar Swissy. Dollar yen is in the bullish mode now. Was very, very flat, took very, very long, finally got a spike and continuation as well. More importantly, got a continuation to the upside. That is very important. So let's see. We have a initial pivot here and a high and low about 50 pips away, which is not too much. Let me take a look if that's correct. No. Sorry, I made a mistake. The daily low was a bit lower here, right here. Yeah, that makes more sense. Yeah, good. Okay, so this is the daily high and low again, the golden lines. We're looking for a with the trend continuation setup, and obviously that's to the upside here at the moment. Because we've got everything lined up, so that would be the with the trend setup. If price does manage to break below L4, we already have a daily low pretty close by. So there doesn't seem to be much space. I mean, we do have this space between the moving averages, but it's basically chopped up between an L4 and a daily a fib S1 and a daily low. So that could be pretty choppy. The upside is more interesting, but we do need to break above the daily high because basically if we take a look at the current price, it's only about 15 pips away. Stop loss is maybe 10 away, so it could make sense, but moving pretty choppily as well. Not too big of a fan because this was pretty impulsive. This could be correction, so I would rather sit on the sidelines for the moment. Pound yen is influenced by the pound, of course, so also here the news event is in play. Pound yen, though, had a great trending mode recently. I know that Davor, I think, took this trade, so great job yesterday, Davor, using these moving averages or something similar. At least using these two, I think probably using the 34 EMA band as well. Yes. Yes, everything was the same except these two were 34 EMA bands, the one we were using last week, that template. And well, it's basically the same thing here. We can see that the price is above it. Price is above all moving averages, broke the daily Friday's high with this particular spike. The hook back to the daily high, the bounce off the daily high, and for instance, either a bounce or the break of the fractal could have been indeed entries, and you got these pips here, depending on how you do it. If you would have trail stopped it by 6 pips, then you would have probably exited somewhere in here because I know that this was less than 6 pips. All right, so great job on that one. Davor, great trade there. So that's something that we're looking for similar today as well. All right. So what do I mean with similar? Here too, we're right at yesterday's high. So we need that to break first of all because we don't want to go long right in front of yesterday's high. Let's see. Davor saying 171.35 entry. Let's take a look. Ah, great. I think you got it like on the bounce up here again. Good job. 171.80 out. Good. Nice job. Very nice. Excellent work. So got a good trade there. Using a trading stop would have been roughly 171.95, but there was a bit lucky here that it only got broken by 5 pips and not 6 pips. Ah, you follow the candles. That makes sense, actually, because you know, you don't want to give up. I can see why you want to not give up too many pips, because you don't want to maybe live through this retracement. So I fully understand that. Using a parabolic is a good way too. If you don't want to give too much profit back, and about 6 pips below parabolic, for instance, would have been 171.78. Yeah, so 171.80 makes a lot of sense indeed. I see your point. If you would have used this as a trading stop to catch this, indeed. Let's see. Way's asking about an under indicator called Chandelier. I am looking for it, but I don't see it myself. Oh, it's not MT4? Okay. Then I don't know. Sounds interesting. How much space do we have above the euro yen? Well, we have a daily fract at 173.55. So if we break yesterday's high, there's certainly some space up to that high, the daily fractal here. And there could be a breakout space in this region right in here. Okay, so this space right in here is what we're looking for. The golden lines, once again, are the daily high and low, and we're pressing right at the daily high. So if we break that daily high, hook back to it, there could be continuation trade up to the fractal right there. There's a lot of momentum on this 4-hour chart, because look at the parabolic, still being trail stopped on this 4-hour chart. The moving averages, the 21 is very far from the 34. That means a lot of momentum. Right? There's not much difference between the 21 and 34, as you realize probably. 21 EMA and the 34 EMA are relatively close. So the more they gap, the more momentum there is the more momentum there is in one direction. There's a pretty good momentum here on this 4-hour chart. So if we break that that high, we could see maybe follow through on that. '50-minute world is dying down a bit. We also have sorry, excuse me. I had to sneeze there. It's also getting a bit of divergence between the 15-minute tops. The 1 hour doesn't have that as yet, but the 15 does. So we could see a bit of retracement back to the blue band and get a bounce off of that level. That's something that could happen. So maybe a bounce here at the pivot and at the L3 long and at the 1 hour moving averages could be an interesting confluence for a bounce. And if it does bounce there, then there could be a good continuation. Maybe then we get the break of this top. That's something also to think about, that scenario. In that regard, when we do make that move down to the L3, this will probably move down to the 0 line. And once it's down to the 0 line, we'll see the retracement finish, basically, because that's what it means when the AO is back to the 0 line. And we'll probably see one more move up, because this is a very strong AO reading, which means there's a lot of momentum on the hourly, which means that even though we might retrace back to the 0 line, there's a high chance to break this top. Okay? So maybe max down to L3, but then that should be roughly a bouncing spot for more upside. If not that, then let's take a look at the 15 again. Then definitely the daily low, one would think, right? So maybe these 3 levels could be bouncing spots. Seems likely. That could be another scenario to look for, besides the daily high, the break of the daily high. and that is primarily based on this divergence and the fact that we are right at the daily high. Plus, if you look at price action, it's quite slow. It looks like a rising wedge to me as well. And rising wedges are not trend continuation patterns, but reversal patterns. But just because there's a reversal pattern on the 50-minute world doesn't mean it has to fly down 3,000 pips. A reversal pattern on the 50-minute world could easily see indeed a dough maybe 20 or 30 pips down to this L3. So let's see. Just thinking, there was something in my mind I wanted to share with you about this pound yen, but now I don't remember, unfortunately. Well, anyhow, I guess you get the point. I hope that just because it retraces a bit doesn't mean that looking at this structure, this is still looking like a very bullish impulse here. This looks like a wave 3 of some sort, maybe. And we could get a wave 4 here, and then a wave 5. So that's something that could happen. That's not what I wanted to share with you, but I just don't remember. So it doesn't matter, I'll go on. Don't want to hold you up here too long. Let's take a look at the euro yen. It too is pretty close to the daily high. It has actually been moving up as well a lot. Here was a breakout trade. Here was a breakout trade. However, we had a pretty strong impulse here and now moving up correctively. Here too, there's some divergence between the tops and the 15. So here too, there's a potential maybe to go to L3 as well. In any case, we have a daily high pretty close by, so it doesn't seem set up at the moment. Odd yen looks better in that regard, to be honest. The odd yen, let's take a look, broke yesterday's high already, and price is just as bullish mode as the others. Yeah, so the Aussie yen looks interesting. I mean, we did break yesterday's high already, just like the New Zealand. And we can see that if we make it to the L3 here, that also could be an interesting level, just like we already mentioned with the euro yen and pound yen. It's a confluence of the pivot, the L3, and the moving averages. So that is an interesting combination. Furthermore, we're definitely an uptrend. We have a very strong angle of the moving averages. There's a lot of space between them as well. So that could be a bouncing spot. However, if we want a breakout trade, then the breakout will have to be above this fractal, for instance. At the moment, we're moving down, though. Let's take a look at the Aussie. Maybe the Aussie is making a bigger retrace. Yes, it is. Alrighty, let's see how far this goes. Back to the Aussie yen, we already looked at that, in fact. Pound odd. Let's see, pound odd broke yesterday's low, but then again it had a huge spike up due to the news event. Here too, the Aussie is a bit difficult to trade because of that news event, so wouldn't be looking to trade it. Euro odd too, in fact, broke yesterday's low, but then had a big spike up. Euro New Zealand is close to yesterday's low. Pound New Zealand 2. All right, that's about it. Nothing at the moment breaking. We can take a look at the New Zealand dollar, if anything, what's happening there, because that's one that did break as yet, and it doesn't necessarily have to break a daily high or low, obviously, but we do need enough space. And if you look at the pound New Zealand, there's basically a lot of choppiness. The price is very close to the low, but the moving averages are bearishly aligned. So really, the only interesting trade here, for instance, is right in here. at the moment. There's not much space to the daily low. There's not much space to the upside because we're the moving averages are bearishly aligned, indicated by the green circle here. So yes, there is a downtrend. Do we want to sell right here? No. It's too close to support. We have to be smart with the trend traders, not naive ones. And selling here is risky. And doesn't match the reward. Same with the Euro New Zealand. It too has bottoms here. Maybe some breakout to the upside could happen on the Euro New Zealand. If we break above here, hook back and go up to the daily high. Otherwise, a break of daily low, and we have some downside potential. Same thing for the Euro CAD and Pound CAD. Looking for a break of that. Although we can see that we are bumping into some resistance maybe on the Euro CAD that's coming in like this. I want to be careful of that maybe. So maybe the Euro CAD not the best example. Okay, so that's the main message using Camarilla and moving averages. Usually we only focus on one of the two. I thought it could be interesting maybe to combine them and show you that. You can see though when you're using daily highs and lows how much patient we have to be throughout the day to wait for setups that have space within intraday time frames and or have already broken certain levels and therefore created space. Okay, so we can see that we need that patience and discipline to wait for those setups. Got one example of a good swing trade as well, by the way, on New Zealand yen. I took this breakout in here of this consolidation, still in that trade, and trail stopping this upside here as we speak. So that's pretty cool because as you can see, moving very nicely. Got the trail stop here locked in, pretty good amount of profit already, and still alive this trade. So every time it pushes up, you know, we got more pips in the pocket. That's great. And how long can you stay in a trade that's going your way and you've locked in profit? I guess as long as you want, as long as it goes up, why not? As long as we get new 1 hour fractals that are higher, why not stay in, right? There's no ceiling in that regard because the trade is already locked in profit. So that's an example of a swing trade. Swing trade, of course, obviously on the 1 hour chart, we don't necessarily need the intraday levels. So that's why you wouldn't see a Camarilla here. And that's why I don't have the Camarilla there. You can still use, even for swing trades, you could still use Camarilla, just maybe to pinpoint the optimum entry for your swing trade by using intraday levels. You could do that, I'm not saying, but it's not as key as when trading the lower time frames. Pound dollar is having troubles here, as we can see, with the daily high. It approached it, now moving down. Let's take a look at the initial daily high and low of today. The initial high is at 166.71. Price, as we know, when it breaks that top, usually doesn't get some opposite motion. Actually, that's what it's doing right now. Anywhere between 166.52 and 42 could be definitely a support level. $618 bounce here off of this fib. So let's see. How about the euro dollar? Is it getting follow through? Yes, it is. Wow. More than expected that early in the day. Let's take a look at the 5-minute here. So price is approaching the daily high in H3, so there'll probably be some resistance. We can see though that there's a good opportunity, a good chance that any hook back here will find support from our upside on the euro dollar. Now we do have news events, so let's take a look what those are. German manufacturing in 18 minutes. $16 minutes. So and Italian manufacturing in 6. So that's something that could be, of course, influencing it. We'll have to see how the news event fits in. But after the news event, if everything subsides and quiets down, then a hook back and a bounce is in the cards, is potential possible. Okay. From a bigger perspective, for instance, Wei is saying that the euro dollar is pushing against 200 EMA of the 1-hour chart. And if you look at the hourly chart, you definitely see a lot of choppiness, because if you look at this particular time frame, wait, the camera is on somehow, 1 second. If you look at this time frame, you can see moving averages are flat. They are basically almost like intertwined with each other. They're just officially separate still, but the difference is so little here. They're more or less on top of each other, but the hourly momentum is up. If you look at the green, the dark green compared to the light green, you can see that the 21 is definitely above the 34. So momentum is up, but it's no trend. It's choppiness, in fact. Momentum is actually here up indeed. And Wei is saying MACD crossing upwards above zero line now. So this is a bit of a mixture. That's what I don't like about it, but the momentum is up. This resistance line is also in play, roughly speaking. So we could see maybe a bounce and a pullback and go. That would be something interesting. Otherwise, don't want to go long here. Obviously, as I said, I'm looking for either a break. Let me say it this way. We're looking for a move up and a hook back and a bounce, or we could even break above it. Still, we're still looking for a hook back. That's basically the motto. The hook back is the motto, is the main message. Because even if we were to break this orange, even if we were to break the orange line and the H3, there's just a bit of space up to the daily high. Even if we break the daily high, then we're still looking for that retracement and bounce and break. It's just not worth it right here, especially when we have news events that could be maybe negative and send us down. However, it is looking, as I said, like a if we do break, then it could be a signal that that could be the direction we're looking for today. Now we got the bullish break of the consolidation. The next step what we want to see is a slow retracement and a bounce. The 1 hour is very choppy. The 4 hour, we can see the price is actually retracing to the intermediate band and has retraced down to the long-term band and has bounced off that long-term band, roughly speaking, and the 50 fib, which means that this could be a bigger retracement for more upside. Just like we had dips here and here and here and here. Let's see if this is one of them again. Now, just because we're back at the long-term band on the 4 hour chart doesn't mean that we're going to follow through right here, right now. Certainly not. Therefore, that is why, of course, the main reason why we're keeping on this 15-minute chart, because that's something we could measure a lot better on this chart or the hourly than the daily. QE is getting back that retracement, so let's see that we're looking for a potential bounce at the moving averages. roughly at the 50 fib, for instance, or 61.8 of this daily 15-minute fib. Now there are two ways of doing it: is waiting for a bounce at this fib, or waiting for the break of this high with the stop loss below the low. The last one is more confirmed. However, the stop loss will be, the entry will be later. Entering upon the bounce of price at these fibs or at the fibs is less confirmed, but would be at a better price. To make that judgment call, it really depends from time to time, from case to case, how the structure of the market looks like, which one is preferred, and which one I prefer. Depends on various elements. What is the trend? How does the hour look like? Maybe what is the momentum looking like? How strong is the trend? In this case, difficult. I'm not big fan of these tops right pretty close by, so that's one thing that makes it a bit more annoying. Also, the recent band is quite flat here. That's something I don't like that much. The Kiwi is the only one, though, that has broken the daily high. Doesn't necessarily mean that it's the only trade that we must take today, because there will be a lot of things developing throughout the day, so it doesn't have to be this one necessarily. The other one was the odd yen, I believe. Just like the yen pairs, looking for a move back to the L3, in fact. L3s are basically bouncing spots for upside potentials. H3s are resistance spots. And when we get below L4, that means potential for breakout to the downside. Above H4, we have a breakout potential to the upside to H5, L4 down to L5. So let's see, with the odd yen, of course the yen is moving down, the Aussie is moving down, so we have to see, but therefore there's maybe a decent chance to go to this pivot point and L3, and if we get a bounce there, it could be interesting. Something to keep an eye on, though. Okay, that's, I guess, the most important things I have to say for the Camarilla intraday. Let's take a look at what longer time frames to see if there's anything else going on that's interesting. Okay, if you have any questions, let me know. Otherwise, I'm going to take a look at the moving averages without the Camarilla. From a swing trade perspective, I like the Aussie versus CAD at the moment. And the reason why I like it is as follows. We have a good trend. Why is that? Because price is obviously above the short-term moving averages. The short-term moving averages are above the intermediate, and the intermediate is above the long-terms. Everything is aligned. Furthermore, we have good space between those moving averages. Also, price dipped below and back above it, indicating a retrace and continuation. The AO was also back to the zero line. And we broke the first 4-hour fractal. So anyone who watched last week's Thursday's webinar knows that when we first move down to the zero line and break above the first fractal, then that is actually a signal for this particular strategy of the AO. So I have a long red here at the green line with a stop loss at the red line, looking for an upside continuation. I like this. This is a good trend on the odd cat. So I like this particular swing trade. Price is still at where I took it. If you look at the daily chart, yes, we did have a big wick here, but we also have a bullish and a bullish candle, provided 2 wicks at the bottom. So it looks like this bearish candle had this effect to the downside, but we bounced off the 50 fib. It looks like price is reacting to that 50 fib. And we have at least today and tomorrow, if not even Thursday, to break this top. So plenty of time still for that move to materialize and this swing trade to develop. And on the weekly chart, we see that there's a pretty big space here. The next weekly resistance is all the way here. So I have the TP at 106.16 roughly. That's the swing trade I have in mind, aiming for basically the next resistance on the weekly chart plus the stop loss is below yesterday's or last week's low, in fact, and this week's initial low. So that's the reward to risk box. The reward, of course, in green, the risk in red. The weekly chart did have a bit of a wick, so that's why I want to be a bit cautious, and that's why I'm saying we have some time to develop throughout this week. But if we don't continue, if we don't post a higher high by Wednesday or Thursday, by the end of Wednesday or beginning of Thursday roughly, somewhere at least, let's say by end of Wednesday or at max during Thursday, then I want to get out of that swing trade, because then this weekly wick could start to have impact on the currency. If we don't break the high soon enough, then we're going to see resistance kick in, and we'll probably not break the high, last week's high. So then I don't want to hang in and wait and hope. So that's the time frame that I have connected with this trade. The hourly did get a big bounce off of the 50 fib. I actually had an entry on another account at the 50 fib with a stop loss at the same spot. That was an extremely tight reward to risk, about 21 pips risk, in fact. And I'm still in this trade, as far as I know. Let me check. Yes, I am. Up about 86, so I'm up 4-1 on that trade already. And I'm actually targeting 104.10. Why 104.10? Because there was some minus 272 target, I guess this one. I don't know why 104.10 now, but minus 272 target is 103.96. Anyhow, maybe I'll change that. But if it gets to target, I'll be trail stopping the 1 hour fractals, by the way, though. But if it gets to target, it will be a 9-to-1 trade. So that would be cool. Let's see. That was this 50 fib bounce, and I used extreme tight stop loss right here. So that was very, very nice for me. Let's see. At the moment, though, it's locking in about a 3-to-1, I guess, or 2.5-to-1 right here, though. Let's see. Let's go through other charts and take a look at the euro-dollar from a 4-hour perspective. We can see that if it breaks above these tops, maybe we're getting into more of an upside mode. For the moment, though, it's definitely caught in resistance and quite messy as we speak. This resistance line is definitely there. The pound dollar, a lot of momentum here to the upside, breaking to the upside with this bounce at the bottom of the support here. So for me, personally, at this moment, what I'll be looking for is a retracement. We want to see this go back to the zero line, and then if we get a bounce, that's something that would be very interesting in the pound dollar for this continuation. So I like that pound dollar, just waiting for a retracement. This back to the zero line could be very interesting. AUD USD 2, looking for a retracement down to the zero line. and then up again. Kiwi as well, looking for retracement, this back to the zero line, and up again. The Kiwi just missed my TP. In fact, this swing trade we discussed about last week. Took an entry here above this, same scenario, everything is lined up. Back to the zero line, price is below it, then above it, breaks above the first fractal, and boom, this is what we get. And didn't get to my TP, moved my stop loss though to exit here, maybe a bit too tight. In retrospect, probably I should have used a 2 fractal back instead of 1 fractal. Would have survived with 2 fractals back. Stop loss, trailing stop loss would have survived it. What I mean with 2 fractals back means wait for the first one, wait for the second one, and trill this second one. That would have survived this pullback and would have been in the trade still. So that's a bit of a pity because I do think that it looks decently set up for more upside if you look at it from a swing trade perspective, because everything is very nicely aligned. So it could continue for more. So got to bet. Was a bit too tight, I think, in retrospect, but okay. Still got some nice profit, though. Yes, indeed, Wei. It is actually very, very good idea about the two peaks, 2 bottoms away. It is a very good way of putting initial stop loss. I don't necessarily always trail stop loss the same way though. That depends. I guess it depends on the circumstances, because if you get a very big spike up sometimes and there's no fractal, I don't want to wait that long with moving my trail stop loss. I definitely have patience, but don't want to wait for this to happen and then use this as the trailing stop loss. Yes, indeed. Definitely, Wei. Definitely. Well, it's not only that, but it's actually maybe even more so, or depends which broker, but more the big banks, right, that have a pretty significant influence in knowing which levels are key. So definitely. Dollar yen. Let's see. What else is going on? So New Zealand yen, New Zealand dollar is continuing up. Not sure if we're going to get the retracement here or not yet. I don't think so. I think we'll probably see one more move up, and then we'll see a bigger retracement. So that's why I made an intraday, looking for an intraday longs could be interesting, as we already looked at, because we don't have any divergence here as yet on the 4-hour. So one more upside seems likely. Dollar yen looks like this punch is trying to break away from the moving averages. Moving averages are reacting to that. Let's see if it's sustainable or not. Euro yen is breaking out as we speak as well. Breaking out of this trend line, waiting for a hook back to the 38.2 fib to take it to the upside here. Other than that, I don't want to bore you with all these currency pairs. But obviously, the main point is that you can look at the moving averages on the 4-hour chart and do a pretty good job of understanding if you're trading with the trend or a reversal, or where the trend with the trend trade would be. At the moment, the best with the trend trade, I would say, is the odd CAD. Other than that, we do have potential in New Zealand, the pound, the Aussie yen, the euro yen, those types of currencies, the pound New Zealand as well. Look, everything is aligned, right? We're just not there yet totally, not there yet fully, that everything is lined up as yet. What I'm looking for specifically is this AO to go back to the zero line, which it just hasn't done yet, and preferably to make a break above the short term and then below it again. Darshan, good to see you, is asking about the direction of the pound. So let's take a look. And what I think could happen with the pound, let's take a look. Well, it was looking like a wave 5 potential. Whether this wave 5 is finished or not is the question. There is some divergence between these tops, so maybe some retracement is possible. However, everything is bullishly aligned, so that's more or less a bit of the issue here. If we go to our Camarilla, though, let's take a look. 1 second. So 50-minute world, definitely bullish aligned, but whether we have enough steam to move up or whether we retrace deeper, that's a good question. Let's take a look. This is the 5-minute world. We're very close to that daily high. And it's really difficult because I would say it's almost 50-50 looking at this. I see this pretty correctively, so my counterintuitive hat says maybe it can move up down to this L3 and bounce off of that. With the trend personality in me says, you know, this is still above moving averages, and although it's maybe choppy, it's because of the news event maybe that's choppy, and you know, don't underestimate the trend. So there's a good chance it could continue. However, if it does either of the two, I'm not interested really, to be honest, because this is maybe some downtrade here if we break these bottoms to the L3. If we break above this top, then we definitely don't have much space to the top, to the daily high. So that's why I guess I'm waiting for more info at the moment. From the hourly perspective, though, there's a decent run up here, and price is still above the moving averages, with a pretty good gap between these 21 and 34 EMA. De facto, we have divergence as well. So that was one of the main reasons why I said we could maybe see a move down to L3 and the moving averages. If that does happen, that's the most interesting spot, I think, or upon the break of the high and the hook back. This almost seems like in the middle of this is almost like a no man's land territory at the moment. PMI will definitely send it one way. Or both ways, depending on how volatile that news event is. Yeah, I guess that's it. I would just wait for a move here or move above and hook back. It's not that exciting maybe, but there could be some potential though if we break this support, break it, hook back. There could be maybe a hook back level to take it to that L3, but we do have a pivot pretty close by, so by the way, there's always the potential, of course, to retrace on an AutoCAD, to retrace part of this this maybe it's still of this move up, right? So beware of that. If you like to trade, you can still maybe wait for the 50 fib or 61.8 fib. Not sure if we get there, but it could happen. You get some discount compared to the breakout trade. Well, folks, if you have any questions, let me know. Otherwise, I'm running out of things I was actually planning to share with you. So I guess sooner or later, slowly but surely, we'll wrap it up then. So let me know what your questions are. Tomorrow, of course, we'll be back with other webinars. Let's take a look at this news event here in the meantime. German PMI just slightly less than forecasted, 53.7. Italian slightly more than forecasted. French slightly more than forecasted. German unemployment change positive though. Unemployment rate positive. So that's good news. Euro manufacturing PMI flat. Euro monthly unemployment rate slightly up. Overall, I guess, a bit more positive than negative. Spanish PMI was also positive. Next one, 26 minutes, is pound PMI. So that's going to be close. 28 minutes from now, probably. No, it's at 9:28. Funny. Not 9:30. I don't know why, but. So tomorrow we'll be back with a live trading lab. We're going to take a look at trend lines. And Toronto is going to take a look at price action trading part 4 in the evening at 6 p.m. Central European time or 5 p.m. GMT time. And then we have Camarilla and intraday trading like we did today on Thursday again. So I hope to see you then. Maybe we'll practice this particular concept in more detail. So if you find it interesting, Thursday would be definitely a day maybe you want to come back. And well, tomorrow's trend line is always interesting as well. So by all means, join all of them. Thursday, we have the basic Forex strategies part 2. Great, Mike. Good to hear that. Thank you so much for that message there. Always good to hear. So thanks so much for that, Mike, and everyone else, in fact, for being here. And well, we'll see you soon. Wish you all a great day, and above all, great trading. Cheers.